Hello, ladies and gentlemen. Welcome back. We've got Francis Hunt joining us. It's been 2 years since he's been on to give us his insights of what's going on in the world. Now, a lot's happened in the last 2 years and specifically in the last few months. So, Francis, firstly, welcome back. Hope you've been well. And with everything that's going on at the moment, what's front and center in your mind looking at the markets?
Yeah, we're going through a very interesting. First, delighted to be back with you. Thank you for inviting me. We're going through a contagion of dominoes that are falling. I would say probably our most significant call that we've made recently that's played out was the first time ever to call the top on the bond market of 2020. And that is the beginning of debt valuation contraction. That means a 40-year bull market since Volcker, who raised rates deep into the teens, was devaluing all the Nixon and Johnson's debt that was raised in the conflict of Vietnam. By the way, they dropped more munitions in that conflict on the other side of the planet than they did throughout all of World War II. So people don't realize what a spending splurge that was. The French called for their gold instead of the paper, and that started a run, and that's where you got the temporary suspension of the gold standard, only for it to go full free float, in truth. So kind of that's where we are in terms of debt. So we are watching a debt-based contraction. We then said, and we've done a lot of diagrams and that, and by the way, if people click one of the first links in any of our YouTubes, there's a free course material in that, and they will also receive our newsletter. And in our newsletter, we do a lot of visual diagrams all the time to help people understand. If you position, there's this sort of machine with global liquidity. It's like watering cans, troughs, little aqueducts and everything, and it's being moved around, and water levels keep finding the level. And that is money flows. Think of the water flowing and dripping, filling this up, tipping over, pouring, this complex machine. If you can understand the flows, what's getting the flows and what's giving up flow, you know what to short, what to go long, how to position. And this is a key tipping point in that mechanism where actually the debt market needs devaluing. They've been adding $1 trillion every 100 days. They dropped to 81.5 at the end of August going September. That was under Yellen. Of course, we'll come to the election and the Trump part of it in a minute. But all of that was driving gold. Gold breaks first. It's the king of anti-fiat. So we have also in our last two, we explain the anti-fiats. Anti-fiat is both anti-fiat and debt because it's a debt and currency system. They exist together. So the debt contraction is also a massive loss in buying power in money. So it's associated with the immense proliferation. That's the 1 trillion every 100 days, now 81.5 days. That's a loss of buying power of money. So everybody is being made poorer. And for an Australian, you're being made poorer in a similar way to the US. So you are just a miniature version of that. Only the base currency of the planet has a couple of privileges that you don't have. But it's also coordinated, synchronized. So anyone who's not Australian and is watching it, you can be in the UK, you can be elsewhere. I'm speaking to you from South Africa. The same is going on. There is an explosion in debt that is now in a state of contraction. So I refer to this as a sort of huge, our existing system. And I'll show you a couple of diagrams. This is a little example of some of the things we do. Because if people can just conceptually grab that. You know, when I was at school, I never really did my homework. I did the first one we had to do, and then the one at the end, the hardest one. And if I could do it, I had the concept. I didn't believe in rote repetition. I said, can you work the algorithm? Do you understand how it flows? And this is what I would hope to achieve for you in understanding the flows of money in this game. We have a Jupiter.
Yeah, just with this, France, I'll let the guys know. We'll put the link down below. And I think it's good for people to understand this because in Australia specifically, people are starting to realize the cost of living is going through the roof, the value of our dollar is dropping, and people are finally starting to wake up that, you know, our country's going more and more in debt. You can't afford a house in Australia these days if you're young. You know, they've basically got no chance of owning a home. So more and more people are starting to look into this. So I'll let you continue explaining this, Francis.
Yeah, so you get an assets appreciation boom. You mentioned housing, so let's just address that. And I know it's a particular thing for Australians. I have an elder brother who's in Perth on the resources Western Australia side, and he held off buying for a long time and it just kept marching before he purchased. And I know that's a very specific thing, almost like the UK property. And what's essentially happening is money crowds into places when it is seen to be losing value. So as the debt, which is often a lot of your pensions are sitting holding this asset, is contracting, it's like this Jupiter. It's made up of fiat, USTs, UK gilts. It'll have the Australian bond market in there. It'll have all of that. And this is your legacy system that's in a state of contraction. And what tends to happen is money, when it's dying, quickly flows to where it's treated better. And the first move started with gold. In fact, gold has been in a bull market for an extended period, but it caught attention really only after it started making new highs. And actually, it's the central banks that have been moving the needle on that. And some traditional finance, hedge funds, etc., started. It's still early doors. It started. So that's where you're getting these flows here that I'm looking to indicate here, and I'll use the pink arrow that's going into gold. It's the legacy, it's the original money, and I still hold it to be that. It's probably 15 to 18 trillion going on 20 soon. And silver is like association a little bit later that comes to play and will inflate more. So that's been the stage that was going under the Biden. I'll tie this to presidential cycles. It's not because these presidents are making these decisions. It's because the agenda that they are given to implement pivots when they have an election to help with the illusion that you're actually voting matters. When in actual fact, they need to staircase a system in and they just advance different legs under the name of a puppet of choice. So as you mentioned, selection, election, Trump's pivot and the Trump trade, although it's got nothing to do really with Trump, he doesn't understand cryptography, is actually taking some of the steam away from the gold market and transferring it back into the crypto market. The Trump trade is a crypto trade, and the 4-year cycle that was a little bit of a dull altcoin environment was being rev limited by the SEC, which was the Biden administration. So, but essentially, the dark state that controlled Democrats and Republicans, were holding that back and buying time to get the tech advanced, etc., so that it could do that. They were working with the central banks, Ripple and XRP, which we've been extensively long and doing exceedingly well out of, as well as being long in gold, but we've pivoted our emphasis slightly more to the time that's being advanced. Just by being pragmatic and looking to make the maximum money, is now running like a monster. And that is the rail system for CBDCs, which will be brought in. And this is your surveillance finance system. This has been their intention. And the Trump is the escalation of the caps. You've got to fit this Jupiter into this beach ball in the right corner. So what actually happens is Jupiter is contracting. The debt markets are actually slipping. Until recently, even though the Fed was cutting, the rates continued going up on the 10-year. It's now turned and is coming a little bit down. But that just reminds you, at the end of the day, the central bankers don't really set the interest rates. When things have gone too far, the market sets them and says, we don't like it at that value. We want a higher yield and we want to pay less. So that's how it happens. Capital value down, rates up. Then people start saying, and if you're going to keep printing them at that rate, in actual fact, I'm going to want to pay much, much less, and I'm going to want a much bigger yield. Because that dilution is obviously inflationary. It's not a stable money. We're all monkeys on greased poles. And to our Australian brethren who are finding that their money doesn't go as far, that's exactly it. The number at the nominal level is the same, but the buying power isn't. You stop climbing and you are slipping down into the tar pit as the monkey on the greased pole. Inflation is policy. by central bankers. It's 100% policy of intent, and it is an impoverishment policy, and it also drags you into higher tax brackets, etc. So it's a tax increase in every single name. You get bracket creep, etc. But anyway, going back to the flows are redirected a little bit away now from flowing hard into gold and more via the tether system, which is already the beginning of a digital dollar being pushed into Bitcoin, and now we're seeing a roll into altcoin. So we are now altcoin dominant. So that's kind of like the silver to gold. So we never got this full silver run, and we haven't had the full gold run. This moves in a slower time frame. Crypto is like dog's years. Think of it as 7 years. So we're getting a Bitcoin run, and we're going to move into it. And this might help a little bit, this diagram also, just visualizations.
Just before we
Of
move on
the
to that one, Francis, I just wanted to touch on a few points there that you mentioned, just so people in Australia can relate. So what you were saying in America, whether it's a Democrat or Republicans, it's this agenda kind of being walked in left foot, right foot. And it's the exact same thing in here in Australia, whether it's Liberal, we've got Liberal and Labor here. They're the exact same thing, except they'll pretend they differentiate on gay marriage or some issue that, you know, who really cares. But the same agenda rolls out, whether it's they're trying to, and it's you mentioned this digital thing, but here there's a push. They actually just implemented a law that no one wants here, where you now have to, well, here I'm in Thailand, but back in Australia, where if you're on social media, they're going to make it that you have to prove that you're over 16, which is basically digital ID, which I think is going to tie into what you're talking about. They're trying to get everyone onto these central bank digital currencies, onto this electronic system. And Trump and Musk being parroted as these saviors are actually just there to bring in this digital system.
Oh yeah,
it seems to be. And you mentioned
and the way they'll do it in America is actually they'll use that they created the fraudulent election to use it. That was the 2020 Biden election, and they'll say never to allow this to happen again, people, and to ensure those newly imported illegal immigrants aren't the ones cheating and or getting a vote, having never paid a tax dollar, etc. We need a system to make sure the integrity of the system is great, and that will be the digital ID house. And it'll also come in for social media, for everything. And hey, once you've done this once, it's so convenient and cool for everything, you know. And of course, now you'll walk around the high street and all those security cameras will be biometrically scanning your face and saying, right now, Francis is there, crossing there, just came out of that shop, and we saw on his card he spent X dollars, etc., etc. So the data sweeping, this is surveillance finance system, 100%. And you're spot on.
And they're
social
trying to bring
media,
it in. They've
and
already
social media.
They've tried to pass laws on it, and you know, if I had to predict something, there'll be a hack or something at some point, which, you know, Klaus Schwab's obviously good at predicting these things, and then you might need one to access the internet or something. But just another point you mentioned about the SEC. By the time this video goes out in the morning, I believe there's going to be a new SEC head announced. So Gary Gensler's on the way out, which is, I guess, one of the catalysts of why XRP ripped, which you were, your community, well, you posted that, which is up, I think, 300 or 400% in a couple of weeks. So, hat tip for that one. But yeah, that'll be an interesting one, because it seems like this administration that's coming in is very crypto friendly. So it does seem that's going to be the push, and they're going to pump the bags to get everyone on board with this crypto system, which you can look at it two ways. You can go, okay, that's not good, but at the same time, it's like, you know, make some money while you can, I suppose, and buy yourself some freedom. So anyway, I'll let you continue there, Francis.
Yes, and quite an important one. No, good segue, and absolutely valid, and I concur with everything. So you've got the bond market and governments. This is officialdom in the old world order that is in a state of contraction, the fiat system that they've essentially broken now that they're going the whole surveillance finance route. And you've got a number of asset classes, and this is useful for the Australians, because I know a lot of people are overweight and they become married to property as their oak. That's the one thing that makes them money, or keeps value in a devaluing fiat system. Rather than making money, you'd need to know how much you're being deflated. But here's what's happening. The devaluing debt market and the devaluing currency, the more that happens, the faster it runs into other things. First, it goes into gold, which is the original anti-fiat, and that starts inflating. So we've made the new highs. We've kind of been doing that step, and that's already been happening. Also, I just want to highlight, there is capital flows of a smaller nature coming out of property. Why? Because you're going to start to have higher interest rates. and they're going to be stubbornly high, and the pullbacks are going to be small, and the rate spikes are going to be higher. So you are in an escalating interest rate environment, even though most people don't realize that right now. You need to measure since March 2020 and see how that's changing. What that's going to do is it's going to force deleveraging on property. And the fact that you think, no, Australia, it only ever goes up, you're wrong, and your time will come, Australians, mark my words. And if you're sitting with 10 properties that you bought and you're letting them out and all of this stuff, and you've got debt, you've got high levels of debt on that, you're in a precarious situation on account of interest rate spikes. And the consumer is going to get more and more wrecked on the basis that you said Australians are finding their money doesn't go very far. So rentals, there's going to be a downward pressure on rentals. Otherwise, you're going to have vacancies, higher vacancies. There's going to be an upward pressure on payments. So reducing your exposure to property. This is the first chart that we drew that shows some of it was trickling into gold. As yet, nothing too big was going into Bitcoin and crypto. Then it starts to go a little bit the other way. Now you start to have money going into crypto and the alt tokens, still coming out of property into gold, and also some of it going into crypto. And right now, initially this was the Bitcoin dominance, the line is fatter, but actually now we've pivoted and we've called this the Bitcoin dominance period is over. The next part of this 10 months to maybe a year, call it December next year, probably September, December, that I think we probably have a bit of a top, unless we get an extended cycle. You're going to have outperformance actually in the altcoin area relative to Bitcoin. And I will show you on a chart why we've made that call just now. So what's actually happening, and this is still talking about the machines and money, is contracting of your fiat, contracting of your pensions, which is stuffed with government debt. You've had some inflation of gold. You've had a little bit of in higher valuations on silver, and eventually you'll get a bit in platinum, etc., and the others. But now Trump has shown up at the roundabout, and he's actually put a traffic cop there, and he's directing everybody to that side. And they are going to use us to hyperinflate the market caps of the new system. So you've got a house that's crumbling, which have the rich legacy London families that are behind so much, and they've got Van Goghs and everything on the wall. They need to take all those assets down. They want to retain those value. They need to take it through a system, a pipe, treasury. For example, going into crypto, it would be the tether market, and they need to put it in the new home that they're setting up, because they're not going to lose their assets. They don't want to have it devalued and crushed. The only thing is the shell, the fiat and debt system, is going to be made to collapse. And it's going to be a very, very bad place to be. Everyone needs to get out of the traditional finance because they are flagging it. Remember, Bitcoin was the illicit, totally private thing for buying AK-47s and getting hits on everybody. And now you have a president and head of BlackRock establishing ETFs. The narrative is flipped entirely on this game. They were holding that back. They were trying to get it. It's only for, they give it that. But they had to win the libertarians over first, their hardest audience. Everybody else follows like sheep. And of course, there's no liberty in any of these tokens. And all the ones we're investing in, some of which I've shown, which are the most statist, XRP, XLM, Cardano, HBAR, which is Hedera Hashgraph. All of these are system statist tokens that are going to be about ID, money rail systems for CBDCs, and everything else. And unfortunately, those are the companies that run in the same way Amazon, Microsoft, Google, and all of these weren't broken up, never faced antitrust, and were made to expand to the moon size by market cap because they were surveilling you. This is your prison token. It is your tag, your prisoner tag. It does plug you into their surveillance system. It does track you. It does listen to you, as does your TV. So, I mean, it's pretty dystopian. I won't go too far down there. I'm not here to depress people. You've got to buy your way into some wealth. And if we get a demand destroying event, for example, where we have oil is looking very precarious, the consumer generally is wrecked, in my opinion, the average layman. We're seeing low hiring, low employment market in US. I'm imagining it's similar. I don't have specifics on the Australian
Yeah.
markets, SMEs are suffering, etc. You could have a demand destroying event. We actually see oil ready to collapse, to spill. We see the euro Swiss franc. So I watch a certain fearmonger indices. USD Japanese yen has been coming down. That we had that for the yen trade fear of August. I'm not saying it's coming again, but it's a fear index. When you see an unwinding of the risk there, the oil price is a fear index. It's looking like it's ready for a spill. We've got setups and trades in there. The euro Swiss franc is looking like a spill, where Switzerland is kind of an insulated, non-toxic, not quite as toxified as, say, Germany and the rest of Europe. And Germany is the spine of the euro upon which everybody else hangs. They are the backstop, and they have ruined everything. Their energy policy, their inflation is worse, their debt, their immigration policy, everything. They're collapsing their car industries. I mean, there's a party that's come out who wants to take them out the euro. That's
Yeah.
the end of the euro
It needs
experiment.
to
So we're
happen. I
looking at,
think at some point it needs to happen. It can't continue. You look at it, it's pretty much Germany holding the whole thing up, and like you mentioned, they're collapsing. Their demographics are terrible. I can't see it continuing. So, but with all these things that are going on, we've still got the wars going on. It seems like Trump's going to push, pro-Israel war kind of in the Middle East, whereas with Biden, they're trying to ramp up the Ukraine war before they get out. Not that it matters who's in, kind of thing. They're pushing the war machine either way. But do you see anything like potentially instead of this crypto run happening, and anything that could come in and stop that? And if it does happen beforehand or once the crypto run ends, where do you think the money's going to flow to, or where people can protect themselves?
I think the money is flowing into the digitized system and the surveillance finance system. I think the truest system that is a legacy system is gold, and we all should have that, and to a degree silver as well, but it will come later. And in other diagrams that unfortunately I just don't have immediate access, I show the firing order. And I show that gold moves first, but it takes a while before silver starts out accelerating. And we watch the gold silver ratio for that. We need a gold silver ratio to break 75 downwards and head to 65. That's the start of a big move for silver. Then you want to be in the silver, much like I'm talking about altcoins now. In fact, I'll show you a chart as to why we say the Bitcoin, and we had a lengthy Bitcoin dominance period. Why we say now it's the alts, and very specifically which alts, and we know them, they're all the statist ones. Why I say that is happening. So I'm going to do a share with you again. This time I'm going to be showing you the chart of Bitcoin dominance, and I'm going to be messing with your minds a little bit because I've turned it upside down.
So people are aware Bitcoin dominance is the percentage of the total crypto market cap that Bitcoin has. So when it's going up, Bitcoin's doing well. When it's dropping, it usually means the other known as altcoins are firing off. So
Yes. And to just make that further confusing for you, I've turned the chart upside down. So this has been a period of Bitcoin dominance because it's going down, but the scale is actually up. So we came right the way down to 60%, which is getting higher. When we were we even were at 39% at the last bull market high because all the alts had run a lot, disproportionately. So that's 39%. So the scale is going down here. It's just so much easier to see inverted. So this is an inverted Bitcoin dominance chart. And this is a classic technical pattern for us. And this was a falling wedge right the way across here into this low. And we have said, right, this is going to break, and that's the point when you want to be not holding Bitcoin and more. So I've been 100% XRP. It's my chosen one, highly leveraged, not highly leveraged. It is highly leveraged to the inflation. I am a highly singular in that I'm totally in it.
yeah.
And it's just been killing it, and I've not needed to add much leverage to get outstanding weekly and daily returns, never mind. So it's been a great last 2 months. And literally it pivoted with Trump.
With that,
And this
Francis,
is
so Francis, just with that, because a lot of our audience are in the traditional markets in stocks, and they wouldn't have seen the XRP chart. I know a lot of people have
yes.
reached out to me on LinkedIn because I'm always posting about crypto. But yeah, credit to you. You called this one well ahead of time. You even called the flush out. If you can show people on the log scale, like the amount of returns you can make in crypto is absolutely insane. But using technical analysis, you can actually de-risk, I guess, your entries and find targets. So So this is the
Yeah,
XRP.
let me show that you're absolutely right to pull me up there because I don't know your audience, and I speak to a lot of people that are long standing in crypto, and many will recognize the chart straight away. So let me just give the context for that. We specialize in trading low volatility to high volatility major expansions. So we have been disproportionately weighted. An ex-community member and I even got through Galaxy options on this particular while this was happening. So I'm talking April of this year. So that was round about here. It was quite a bad time, actually. We're in and around here. We're quite lucky. And we've been trading it long. I wish I could jump on and get some more, but we're investigating that further. But this is the triggering break
Yeah.
here, and that's the break there. You want to be in there if you're trading breakouts, not up top here, and certainly not some of the other people's jewels. And this is an example of what it did last time, by the way,
Yeah.
like that. And
And
again,
so
you had
people are
a
aware this
small.
is log scale. So this is like if you look on the what's that, the y-axis, you'll see this is like logarithmically. So the returns are pretty exponential. And that's
Yeah,
breaking out a 7-year sideways pattern.
that was about 0.6 cents. So you weren't even a full cent, and that's went to $3.37. So let's say you were a full cent and you went to $3.3. That's a 330x.
Yeah.
Um, that's unbelievable during that alt period. Now, the first is always the biggest, so I'm not giving that as guidance, but we've continued to say you're going to break and run through the 20K mark. We have a 19.5, and that could mean you run 29. It could mean you run $45 because this is a 7-year setup in the making.
Yeah.
2017 was this high. And that's the key difference. We said a lot of the alts were capped during this last 4-year cycle. This failed to make a new high. Part of it was the lack of clarity by the SEC, which I treated as an intentional rev limiter on the performance of this car. So this will be very typical mansplaining, but it's kind of you weren't allowed over 2,500 revs in your brand new Porsche Turbo because you're running it in. You're not doing a max speed run now because you had that restriction on you, and the SEC represented that. The Trump trade has already early in this alt run taken you through the previous high now. And you're not far off breaking the 3, which the all-time high was $3.30. So that's very, very attractive potential. And we've been aggressively long here. And this is part of the alts that are eating more of the inflow cash than Bitcoin, which is why when we were showing you that Bitcoin dominance chart, you were seeing a breakout to the upside. That's actually Bitcoin dominance going down because I inverted it because it's easy to see that way. But you're seeing a capitulation. And in actual fact, we see Bitcoin, whether in this cycle or in future cycles, falling below 24%, potentially 20% in terms of total everything. And this upsets a lot of people because there's a group called the maximalists that are all about it's all Bitcoin. Bitcoin's the digital gold. But I tend to just say to them, when in software is the first iteration the best? I'm here by Table Mountain. I don't come down it on a penny farthing and load my bike into a Model T Ford. In actual fact, I have carbon brake e-bike with super light, and I don't go arse over tit as I would on a penny farthing coming down the roads there. And the vehicle I drive is a lot more efficient than a Model T Ford. But maximalists don't like this notion. They are bonded with the first. They are bonded to all the ideals and the fairy tale of Satoshi Nakamoto. They think that one's free and everyone else is corrupted.
It's not just the Bitcoin maximalists. It's also people in the traditional markets that I deal with. They in future, and I'm not saying this is what we want to happen, but with all these real world assets and tokenization of everything, it feels like everything's going to end up on these blockchains, the AI systems. Like even today, like I'm selling shares and I've got to wait 3 days for that money to hit my account. Whereas if I sell crypto, it's instant. So this technology is superior, like you're saying about the penny farthing versus the block. This technology is superior, even if it is status. So the superior technology will win out. And I do feel that any technology can be neutral. I think it's though that we do have people in power and behind the scenes that are kind of controlling these things. And the idea that Bitcoin was created by some, you know, mysterious figure.
Benevolence.
Yeah, you look at the white. I can't remember the exact papers, but it's like MI5 or CIA documents. What it's something.
NSA, yeah, 1996, how to make a mint.
Yep. They had this technology for AI back then too. Like it's crazy. People actually looked into it, but we won't go there today. Well, just actually, let's just go a little bit down the conspiracy train. Trump's grandfather was there when they took Nikola Tesla's documents, and Elon Musk's grandpa was like the head of the Transhuman Society, or whatever it was in Canada back in the day. So a lot of these things that are coming out now, I feel like they've been behind the scenes a long time. And like you said, they had these white papers on cryptocurrency and this back in the day, but it's only been rolled out in more recent times. And like you said, been sold as this libertarian thing, which I guess it could be in some sense, but it's not really.
And the one thing I'll say, especially for all my Australian friends, and we're very well supported by the Australians in our community, and we thank you for that. And I will be in Perth actually for a wedding. If any of you are on the west side of the island, you're welcome to come around and say hello. But that's a small segue on that rather black pilled comment that you gave to add to it. They're all eugenicists and low population kind of guys. And of course, we had recent events that were rather bone-jarringly ineffective for health. That's best not to get into too many details. So people should be very, very circumspect and wary and not in any great hurry to seize government-backed or farmer-backed or major complex, military-industrial complex-backed, tech-backed initiatives. It's in your best interest to be as off-grid and self-reliant as possible to buy yourself more time and freedom. But rest assured, even in the middle old farms in the outback somewhere, at some point somebody comes and says it's time you had cameras on your boundaries and we'll monitor it for you and you can get a crypto token. By the way, that's happening to South African farmers, Israeli type organizations. Offering cryptos, payments, and things for having cameras to keep them safe from marauding, ne'er-do-wells.
We've got in Australia, so people know we've got smart meters, but then also the Commonwealth Bank, who, as of today, is charging you $3 to take out your own money. They've already got it ready to roll out, where basically every purchase you make, it tracks your carbon credits and stuff like this. So, but yeah, look, I think crypto is great for the fact that people can make a lot of money in a short period of time. Not financial advice. You can obviously lose a lot too, but you can basically buy yourself freedom. And if you do like things like gold and silver, which I love, and I know you like as well, Francis, you can.
And that's the thing to convert it to, by the way, because they're incredibly volatile. And I've worked with many people. The people come to me is not. Many people can still make money on their own. They don't need a course or a community to be part of on the bull side. The problem is they give it all back and some often on the downside, or their high water mark is a lot higher than what they end up with holding. And the key thing is not to over leverage, to get out. So we have a time stop and we have target price-based stops for when we get out. And the thing is, you need to get into more stable assets. If you get out close to a top in crypto cycle, and as I've warned, this one might extend because it's become status themed, and you may get a degree of overperformance, but you need to have a parking bay of something that holds value but is not as volatile. And that's where gold and to a lesser degree silver comes in, but still significant. So that's my exits. And people who aren't thinking about exits when it's going this well won't ever be thinking about exits. They'll still be buying dips once the bear market starts. And that's the problem, is a lot of people with no trading experience who don't realize that you actually get dopamine addicted to every morning longing things and just getting more money in your account, that you start to normalize to that, and not having it, actually you feel depressed. So all these things about devices and markets pumping. As a trader who's done this game for many, 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 many years, you need old hands to say, step out, back out, you've done well, put it into a stable asset, switch off the dopamine, go swim in the sea. I'm lucky to have the sea right here. Go do cold plunge, spearfish, do all the things, beautiful things in Australia as a natural point to do. And don't be stuck on that computer. But you need to know when the music's about to stop, because it's violent and it's fast. But there's a chance that this cycle could extend a little bit as well in that. But we'll be monitoring that, and we'll take a lot off. And I would say you want to start gearing back from late September to December of 2025.
Yeah,
So
we'll get
you've
you
got a
back
good
on. We'll
run
get you back
ahead of you.
on if it plays out.
Yeah.
So I'd be interested to know your thoughts on then like the stock market overall, where you think that's going to head in that same period, and also with commodities, what you think, because obviously they've kind of taken a bit of a hit lately, and like you said, once Trump got in, that trade really did reverse. Like gold and silver, like silver looked like it was about to break out of that 40-year cup and handle, and it was looking really good, and then you just got to change with the what's happening at the time, and yeah, the crypto trade was on, precious metals started pulling back.
They turned the spotlight off it. And, you had debt collapse and interest rate rises as part of that, and fiat devaluation that go hand in hand, those two things. So you got the natural gold trade. Now they've quickly rushed. But no, the new system, and they are forking out that money into the crypto. I think we made that point. But yes, but gold should be your reef. It should be where you come back to park your money long term, and I stress physically held and off grid. And I fear that the tokenization is something that we haven't mentioned, but this is that every asset you own eventually will need a proxy derivative that they have registered on the blockchain so that I can actually look you up and go, Philip, his net worth is this. He has X amount of gold ounces, X amount of silver ounces, etc., etc. And paperwork and documents will have to go up even for your properties. That if you understate, there was this Chicago paper, and I highlighted this must have been 5-6 years ago. Vitalik Buterin, working with Ethereum, who's the second biggest crypto by market cap, with a Chicago professor, saying how, oh, this ownership thing, it's so overrated. Uber owns no cars. Airbnb owns no houses. You should just have what you need to rent it when you want it. That is how they frame the subscription model. Instead of selling you something once off, they want to rent it to you in a perpetuity. And the stock market, which is the question you asked, is the thing that most values subscription models over once-off sales. You used to buy Microsoft Office, now you rent it in the cloud. So they keep selling to you. They don't have to come back and sell to you again. Just maintaining its access is a extractionary rental agreement. So they all want to be landlords of the assets, and they're going to tell you owning stuff is dumb, so
I've
that
always,
they can own everything.
yeah, I've always felt if you don't own it, then who does? Like who's going to own all this stuff, right?
Exactly.
They're trying to sell you on
Exactly.
that whole like rental system, but it's like, well, they're obviously owning
That's
it,
right.
corporations.
That's right.
The problem with the digital currency people don't realize and this is why so many people in Australia are waking up to this digital ID push. That now, if you start a business, you need a digital ID. Now they're trying to choose digital currency, but basically they can put timeframes on it to say like you have to spend this money in a certain period of time, or if you don't take your certain medications, I won't go into it, but you know what I'm talking about. That all of a sudden you're shut out of the system. Like, and the fact is, people actually would probably support it in Australia. It's a bit Looney Tunes back home, but these things are real possibility, and I think people need to, I guess, start cluing on to what the implications of these things are.
The tokenization, though, that I was referring to is probably one of the most dangerous, because it's how they will essentially buy all your stuff off you, till eventually you don't buy, you rent everything. Even if you buy a pair of flip-flops, there'll be an NFT or something that gets registered at a cash point of sale or whatever online. So essentially your car, all your big assets to start off with, will be registered literally with conveyancing papers, your properties pre-ready, so that if you understate the valuation for tax, and they're going to say, oh, lots of rich Australians who own property who have got disproportionate gains at the detriment of the youth who now can't get at the ladder, we need to up a tax on it. We're upping the tax. Now you must self-cert the valuation of your property. And they say, oh, it's we think you undershot a little bit there to save on tax. And therefore I can automatically do a purchase by just buying your digital proxy for your home. So it's a forced purchase. You don't even say, no, I don't want to sell. I want to stay here. I've customized. It's like, sorry, the valuation on your property is 2 unders. We'll take it. And here's an inherent rental agreement you can now rent from us. So everybody will be forced to almost hyper value their properties, pay a much larger tax, or run the risk of having it bought out of you from under you. That was the gist of that Chicago paper. brought again by a chosen one with the help of Vitalik Buterin, all in lieu of putting forward this notion that ownership is such a blasé concept. Let us own it for you, we'll rent it back to you at a fair price. Know what I mean? Know what I mean? So yeah, it's pretty dark. And these are digital proxies. So that is inherently what a derivative market is. They actually are going to create a derivative market of everything you own, and online, without ever meeting you, seeing you, or having you wave a gun in their face or a pocket knife or squaring and cussing, they can take it off you. And you'll just get a notification, and it'll have an inherent rental agreement straight back, because they won't take it off you just to hold it. And if they want it to be an income stream, so they will take it off you to purchase. And that's why these cameras and TVs are all spying as well. So it's a little bit dark. It's a little bit, tinfoil hat, if you will. But at the moment, build wealth and maximize it, and get freedom, and get rural, get self-reliant, food, water, all the core things, and you can still bat on for a while, but the drones and the Terminator machines will come for us all in the end, no matter how far we go. But at least you will have got a decent life.
I'm sure we'll turn it around, but I think talking about these things and in their entirety of like, okay, there's this opportunity to make money, whether it's crypto or whatever, whether it's a stock market. That's why people come to our website and obviously come to you. We can change these things by knowing what's happening, and that's where I'm optimistic. And I do think there's some amazing technologies coming through, and I do think, like, you're starting to see.
The problem is who owns those technologies and the intention for their development. And the concern is, because you also asked a stock market question, and I didn't really fully answer that, if I answered it at all. Those areas that are statist are the ones that are running chips and AI.
Yeah.
And that's what's running, because that's your future prison system, and they know it. And the people that are playing feel uneasy about it, but that's what's running. It should, in fiat devaluation, just be, I'm also watching the cocoa and the coffee beans running and trading soft commodities, etc., and various other things that have been because of money devaluation. But I can tell you, the high-tech statist companies are what will run, and you've seen it with Nvidia. Whether that there's no logical valuation for that, but believe you me, if they're scaling the whole world's population in it, they probably will sell an unbelievable amount of chips.
They're also building a you're just mentioning there, like a replica of the world. They're actually creating like a replica of the world. So essentially you can run like lifetime experiments in it and all sorts, which is pretty like, in one sense, it's pretty amazing. But like you said, it's who controls it, right? So I do think it's one of those things where maybe, we might get the first play out of these things. Maybe they're a little bit dystopian, as we're seeing, but I think, over time that goes out, and, there's smarter people that are, I guess, on our side, if you want to call it. And then we can use those things to,
You're too optimistic, I'm afraid. You're too optimistic. They will come out ugly and then concede ground and give you just a foot in the door, and then they'll squeeze that foot in the door deeper. These smart friends like Peter Thiel and Elon Musk are not working for us. They're working against us. But they'll take, the Democrats are retarded type lines, and this shouldn't be happening. Like Elon is tweeting every day about the prime minister in the UK and the dystopia there, and rapists, immigrant rapists getting less terms in prison than people that hate speech on X. All these completely perverted, culturally Marxist agendas. But this is being driven. It's being driven by a group way beyond national governments, and they have all the levers of power, and we don't. And to resist them and to be successful is to actually have a target on the back. I personally fear, just for my limited, rather small contribution, that I've done myself no favors when Twitter morphs into a banking payment system with a social score. My history of tweets will not serve me well at all, and I will have to go dark and disappear too, and I probably won't cope very well. I'll be a Z-class citizen, never mind a B or C-class citizen, for being divergent and being, prone to hate and anti-Semitic, racist, transphobic, whatever you want to call, come up with a crime. So unfortunately, I think you must live every day. I say to my community, here's 2-3 years lease on life. And if you play it well, I'll extend your lease. That's the way you view it. So all those things you've been wanting to do, start doing it now. This is me tapping you on your shoulder. This isn't a rehearsal. This is your real life. If you want to spearfish, go do a course, get a gun and do it. You ain't getting younger. You ain't getting quicker. Keep healthy. Focus on your longevity. Build your wealth and go and do those things. Live. I still ride dirt bikes. I'm no good at it, but I do adventure riding. I live a great, great life, and I'm only interested in summer. If I skied, maybe I'd do 3 weeks in winter, but I don't tend to. I'm only interested. I cross hemispheres. I pay as little to the extractors as possible. I encourage everybody else to do the same. I live my best possible life, doing great things, and actually, it's an awesome life to live. And actually, there's a freedom to saying, "What if I told you you're going to die in 3 years? How would you live between now and then?" Because you may well just, and even if you aren't, I'll extend your lease. Great. But go live the next year, go live the next 2 years with that sense of freedom. And just leave, you don't want to leave the rugby field without having emptied the tanks and done everything for the Wallabies. They're coming back nicely. You want to have shown the coach you're worthy of being included, and you've left it all out there, and you've got a 9 out of 10 performance. And that's how you should approach life.
Yeah,
Yeah,
I agree. I'm
that's my
much the
take.
same. I agree, and that's a good way to end it. Like, don't live in fear. Obviously make as much money as you can, because when you can do that, it buys you freedom. You can actually go live
Guys, you're
overseas. You
free.
don't have to listen to the government. Like, I'm here in Thailand, and like you said, I'm living my life. I get to do kickboxing. I get to do all sorts of stuff. Rather, the thing I found is people are so tied down with debt and all these other things that they can't live the life they want. And it's not to say, like, I'm not trying to sell anyone on whether it's stock market or crypto, but that's why people are in these things, is to buy themselves freedom. And hopefully, the work that we're doing, and I know the work you do, I'll put the link down below so people can check that out, helps people achieve that.
Yeah.
And that's why people are interested in, I guess, our website, small caps, is finding these stocks where they can, make multiples on their money and buy themselves a house or an investment property, or get themselves out of the system and get the life they want. So good way to end it, Francis. Hopefully, let's get you on again once things develop. And look, hopefully things do work out positively. Hope there is you know,
Folks should find us on YouTube. Have a watch. We're on the Crypto Sniper, where we deal with the cryptos, and we're on the Market Sniper, where we deal with gold miners, silver, oil, and other equities and indices as well. We'd be delighted to have you. And there's links in there to book calls or to get a free course just that introduces a little bit more about what we do. That low volatility into high move, fast mover away from your entry, away from your tight stop as a trading strategy can be very, very wealth enhancing. I'll leave you with that, and thank you for having me on.
absolutely. Thanks, Francis. And yeah, I'll put the links down below, guys, so you can check out Francis's work, and I highly recommend you go check it out. So yeah, Francis, thank you very much. We'll speak to you soon.
All the best. Bye for now.